Ladies and gentlemen, welcome to the MPE Summer Week. Please join us in welcoming the chairman of the programme for Day 1, Claire Maslin.
Thank you, good afternoon, and a very warm welcome as we kick off this afternoon's activities and the start of MPE Summer Week. I'm very happy to be here and wish the team at MPE lots of success. They've put in a Herculean effort to get this off the ground. So my name is Claire Maslin and I am Chief Marketing Officer for Consult Hyperion. And this afternoon, we're going to be taking a look at changing commerce and payments post-pandemic or during this pandemic. You're going to hear from a number of experts. We'll have some keynote presentations and a couple of panel discussions. So before we kick off, a couple of housekeeping points. There will be some opportunity for you to engage with some polls. And the first one of those will be in the second keynote. You can have the opportunity to submit questions through the polls tab. And then somehow through the wonders of technology, those will appear with me and I'll be able to feed those into the Q&A session. And then finally, please remember that these sessions are being recorded and we will be posting them later for you to review on catch up. So on to this session. Well, when we kicked off 2020, who'd have thought we'd be in the situation that we've been in for the last few months. Certainly the word unprecedented appeared on the front pages of our newspapers and became part of our vocabulary. And there's no denying that as a result of this, our behaviours have changed. Whether we are no longer commuting and therefore we are gaining more time back in our diaries, but also our shopping behaviours and how we pay for things. But what about the negatives? Are there parts of our industry that are actually not able to keep up with this, who haven't been able to pivot? Some are even questioning their business models. And hopefully this afternoon, our experts will share these insights with you and share experiences from their markets. So we're also going to take a look to the future. Two of our keynote speakers have a great track record in looking to the future and being able to predict sometimes what's coming over the horizon in terms of payments. So I'm going to stop now and introduce our first speaker, one of my favourites, and I can say that because he's a work colleague. I'm delighted to welcome Dave Birch. And Dave, are you with us? Hi, Dave.
That's the most famous building in Woking. I wanted something that an international audience would that's Pizza Express in Woking. That's the most famous building in Woking. So I thought an international audience would appreciate that. Good. Right. Let me just press the button here then, and I will talk to you about. Can you give me control of the screen now? Yeah, there we go. So Claire asked me to look forward a little bit for the opening session here. And so what I thought I would do is talk you through, just a very high level, the way we've been approaching this with our clients. So basically what we did at the very beginning of the pandemic was we began to analyze quite a wide range of material about the impact of the pandemic, not just on payments, but on work and business in general. We talked to a lot of our clients to see what they were seeing on the ground, looked at some actual numbers coming back, and we tried to sort of distill down all of this material, I mean, from many, many different sources, into a few sort of key strategic areas that our clients could focus on and where they could start some useful strategic planning for coming out the other side of the virus. So I mean, the point is that, I'm not just making this stuff up. I mean, we got it from a lot of very reputable sources, and McKinsey and places like that as well. So we ended up dividing it into 8 key strategic areas of focus. The way it worked out was we thought that there were really kind of 4 payments areas where our clients, both on the issuing and on the acquiring side, could look to start developing some new strategies for the post-COVID future. But we couldn't get away from the fact, alongside those, there were a number of adjacent areas which the pandemic is also highlighting. And in fact, one of them in particular, digital identity, was the subject of a lot of press material this weekend, again in The Economist and other places. So I think we chose wisely. So I'm just going to quickly talk you through those 8 areas, and I hope that as the week develops and as the presentations and the workshops continue, we'll see how they're addressing each of these areas to create new opportunities, but also to identify some weaknesses that we might need to look past. So what is our view? What are the sort of key strategies that in the MPE space we should be looking at post-COVID? Well, if we start by looking at payments, now obviously the impact of going cashless in the pandemic has been, initially, people shifted to contactless cards. So in most developed markets, I mean, I'm not talking about the US or places like that, but in the UK and Australia, I mean, people just started using contactless cards instead. And actually, the disruption around that was quite minimal. For most people, it didn't matter. They were quite happy to use the cards. Now, obviously, it meant that, there were a number of places that had to start taking cards, which they hadn't done before. We're going to hear some more about that during the week when we start talking about MPOS and so on. But I think there's another factor which needs to be taken into account, which is at the beginning, people began to use contactless cards. Obviously, contactless cards have a limit. So in some places, people started using their phones instead. Even though they'd never used Apple Pay or Google Pay before, they started to use it because they didn't want to touch cards or terminals. And I kind of think that behavior is not going to change. Now people are used to using their phones. It's not going to go back. That has another implication, of course, which is that contactless becomes, an interim step. What we're really seeing because of the pandemic is a transition not to contactless payments, but to contact-free payments. More and more places now, you walk in with the phone, you scan a QR code. Like I was in the British Airways lounge on last week, just to make you jealous. I actually flew somewhere last week, so I actually went to Heathrow and I went to the British Airways lounge. And instead of going to queue up to get whatever it was, your food and things like that, you sit down at a table, you scan a QR code, people bring the food to you. Now, this is an example of what we've discussed many times before at MPE, which is the transition from checkout to check-in, which greatly benefits merchants. And this is happening because of the pandemic. Even in pubs here now, people walk in with the app on their phone, they sit down at a table, they order their drinks on the phone, the drinks are brought to the table. After the pandemic, people aren't going to go back to the old ways of doing things. The phone becomes the kind of central contact-free, not contact-less mechanism. So the first point is, and it impacts all of these things, we're going to be going to contact-free services, not contact-less services. Now, the second point I need to make about cashlessness, taking cash out, which obviously I'm very much in favor of, has shown, and in fact, if you look at the figures for ATM withdrawals and so on, you can see those all fall. Yes, there's some cash being stashed under the beds and things, but to all intents and purposes, retailers gone cashless, and it was fine. It didn't matter. But it's highlighted the need to have an actual strategy about going cashless, because when you just let cashlessness happen, like for example in Sweden, you get people who are marginalized, some people are disadvantaged, some people are left behind. It's not okay just to let cashlessness happen. We need a strategy for cash. And here they're choosing the wrong strategy. So the strategy is, how can we continue to subsidize unprofitable cash distribution channels, even though cash volumes fall, when the right answer should be, how can we create a strategy which provides people with good alternatives to cash? We shouldn't punish, but forcing merchants to take cash, by the way, is taxing them. It's punishing merchants because the financial system hasn't delivered the right financial services products for people. And actually a lot of that has got to do with identity, not money. We'll come back to that a bit later on. But the point is, it's highlighted the need for a strategy for cashlessness, not just letting cashlessness happen. The third point is, because of this convergence to the mobile phone, we now have the ability to consider real omni-channel strategies where it doesn't matter, the garden centre around the corner from where I live, I can go to the garden centre and I can buy things there and I'll pay on my phone. I can go on the website and I, choose pay on the phone. I can go to, pretty soon, I'm sure, I'll phone up the bank and something will pop up on my phone. We're getting omni-channel, but it's because everything's converging to the phone, not to the web. And actually, that's a good thing. But again, it means we need strategies around that. So, we used to call this the 3 R's in the old days in Consult Hyperion. But we want a common payment experience. And that common payment experience, of course, could come from the mass adoption of standardized request to pay. It could come, it could come from digital currency. It could come from lots of places. But the pandemic is accelerating it. We now see real omni-channel solutions coming into play. But omni-channel, it's interesting. I was talking to somebody else about this morning, just to illustrate how it's not done at the moment. I went to get a coffee recently, and I have an app on my phone now. Instead of walking around to the coffee shop around the corner, you order it on the app, and then you walk around and pick it up. You check in, you don't check out. So, and then when you order it, they send you adverts for other things and things like that. Anyway, so the point is, I feel like a coffee, I order it on the phone, I walk around the corner to pick it up, everything's brilliant. The retail experience has been completely changed by this omni-channel focus on the mobile phone, except for paying. Because when I went to pay, it turned out I had to put a new card in. So in 2020, in supposedly one of the most advanced economies in the world, I don't see very much evidence of that around me at the moment, I'm typing in card numbers like it's 1994. And of course, I can't remember what the CVV is. So I have to run another piece of software, password manager, to find my CVV to put, like, the retail experience was completely, the payment experience still got a long way to go. And finally, one thing I think that a lot of people have overlooked is that the need for governments to drive stimulus payments, both to individuals and to businesses, I think people are overlooking. I think this is going to have a real, in countries that were able to do this effectively, like Colombia, the government was able to get support to families quickly and efficiently. In places where you couldn't do this efficiently, the UK, for example, or the US, where when they weren't posting out checks to dead people, they were accepting unemployment claims, completely fraudulently. I mean, in the UK, the hoop messing about to get one of the bank loans to help the company through the pandemic, when you've got to send in letters to prove that you're a director of the company and where you live, and it was nightmare, So I think people are overlooking the kind of government part of this. So if you live in somewhere like Denmark, where 97.5% of people have a bank account and 92% of people have a bank ID, quickly distributing financial aid to people is easy. But in other countries, it really isn't. And so that brings me on to another point in a moment. Okay, so then we look at the adjacencies. If you're wondering what that picture is, that's my scary picture of the week. So that's a picture I took out of the Apple patent filing for identity and credentials. This is the patent filing for Apple ID. And I put it in all my presentations at the moment to scare all the people that should have had a good ID strategy in places years ago and are now going to end up as serfs tilling the Apple fields, but it's their own fault. It's not like we didn't tell them. So the first thing is there's going to be a massive increase in fraud because of the pandemic, because we've driven people online who were never online before, right? So there's millions of small businesses, individuals, all these kind of people who were never online before and now they're online, and being online makes them vulnerable. And the scammers and the fraudsters are quick to take advantage of this. We haven't seen the figures yet, but I absolutely predict when we see the figures at the end of the year, we've seen a massive increase in fraud. So the fraud stuff we've been doing before, neural networks or whatever, that's all great. But we really need a much more kind of AI, ML centric, much more proactive, future looking opportunity to really do something about fraud and actually extend it even further into helping people to be safe online. I think that's a good narrative for our industry, actually, because it's like we're reaching out and putting an arm around people and helping them to be safe online, not just cutting down a bit of payment fraud here. And I don't care about payment fraud. There's banks' money, so it doesn't matter. The digital identity point has come up in every magazine article, every newspaper, everything I've said about this. The lack of efficient digital identity infrastructure has proved to be a nightmare. The fact that we don't have a privacy-enhancing infrastructure in place already, which we could have used for COVID track and tracing, and I mean, that's bad. You know, we should have had that stuff in place anyway. Anyway, so the point is, you know, COVID is going to push along, but we want it done in privacy-enhancing ways, and I think our industry can contribute to that. So you know this stuff. I don't need to go on about this. One point I would make is the FATF guidelines that were revised, you know, earlier in the year, the sort of March revision of the FATF guidelines, made one kind of interesting point which shouldn't be overlooked, which is they said in certain circumstances, basically when it's done properly, actually digital onboarding is better than physical onboarding. It's not just that, you know, you can onboard people digitally because they can't get to the branch or because they can't fill out a form for a credit card or something or whatever. It says digital onboarding is actually better because it's less subject to human error. So in reality, digital onboarding should be the new normal. Nobody should be enrolling for financial services in any other way than 100% wholly online, and using, not looking up, giving me stupid quizzes about places I lived in 25 years ago, but actually scanning passports and driving licenses and things like that, gas bills in the UK. And, you know, we shouldn't overlook for organizations as well, this problem about establishing the digital identity of organizations, not you know, for stimulus payments, but also for tracking and tracing and monitoring and so on. There's a real opportunity, I think, to do something in that space as well, because the people who know the bank knows who the company is already, so they could do something there. The issue of data-driven liquidity has come up because in a lot of cases, people have needed a bit of help to get through the crisis. And it turns out that actually you don't need that much transactional data. So if you're the payments, you know, if you're in the middle of the payments, if you can see the payments code, especially in a small business case, you don't actually need that much data to be able to be really proactively helpful. Small businesses in particular are really bad users of financial services. They tend to use overdrafts and credit cards and so on. It's actually quite easy to look at their payments going through, look at their cash flow and tell people, you know, you should need this simplified bank loan, and then you can find it for people. So this thing about getting hold of the payments data to make life better for people, I think is really good. And that takes us into the final kind of area, which I think is probably the narrative that we should be thinking about for the future, the overarching narrative. Last year's review of the initial feedback on open banking, the consumer perspective review, said, look, it's all very well, you know, getting access to people's data, their payment data, to help them borrow money a bit more cheaply or find a better savings account. But the real benefits come when you take a much more holistic view of the customer across all these omni-channels, and you start delivering financial health to them instead of financial services. And I think that's a really interesting framing narrative. So I hope I've set out 4 areas where strategies are required in payments, and we can do something about them. I think I've set out 4 areas that are adjacent to payments where we can make new strategies and be effective. And I hope I've drawn them together into a narrative for the post-pandemic financial services landscape, of which payments are the crucial part, because they're 85% of the touch points. This isn't about financial services anymore. It's about financial health. So thanks very much for listening, and I'll hand back to you now, Claire.
Thanks, Dave.
Are you going to do it like the football? Are they going to play some applause and people clapping and cheering and things like that?
No, but I can, if that makes you feel better. I'm very happy.
Then people could choose the soundtrack without the cheering and applause, or with it, and that will give them some choices.
Yeah, I think we're coping with the tech as it is, Dave. So that's great. Yeah, there we go. Off he goes with his mask.
Can't be too careful, Claire.
Okay, all right. So thanks ever so much, Dave. You're going to join us again for the panel in a little while. Next speaker, another gent that really doesn't need very much introduction at all. I'm delighted to welcome Chris Skinner. Chris is a commentator, an author. He's an NED of 11FS and spends a lot of time thinking about what's happening with the regulation and banking. And welcome, Chris.
Thank you, and thanks to Hannibal Lecter for the opening.
Yeah.
I would normally bombard people with lots of slides. I have thousands of slides, but I'm dropping the slides because I didn't know what David would say. And equally, when I was reflecting on this meeting, I decided that there was an interesting question, which is the poll question that I'm going to ask at the start and at the end of my presentation, which is, can you explain to me comfortably and confidently what a merchant payments ecosystem is? And that's what I'm going to concentrate upon. And the reason I'm concentrating upon that is that, first of all, I guess, picking up on some of Dave's points, things have changed dramatically in the last decade, and we probably didn't realize how much it had changed until the pandemic hit us. And then we suddenly realized that everything had to be done digitally for staff working from home, customers ordering and expecting services from home. And were we prepared for that? How well prepared were we for that? And do we really understand what that means? Do we understand what it means even now? By way of example, I see huge numbers of financial institutions making major decisions about cloud, for example, and partnerships with some of the big cloud providers like Google, Amazon, and Microsoft. But that is not doing digital. That is just moving to the cloud because they had to, because everyone was locked down at home. Digital structures are about being born on the internet, being ready for the mobile first generation. And it's not about making, tactical decisions around technology, which is a lot of the things that have been happening in the last 6 months. But the reason I asked the question around, can you comfortably and confidently explain to me what a merchant payments ecosystem is that I realized all three of those things are ambiguous. For example, what is a merchant? When I was dealing with payments as a provider of payment processing technologies, the merchants for me were large commercial businesses, often large retail businesses. And so I would think of the major retailers, and they to me were merchants. I would not think of the mom and pop store on the corner. And yet when we look at Ant Group, which is about to go through an IPO in China, their business has been built on enabling mom and pop stores to take payments. And that is the core of what is now a business valued as one of the most valuable companies in the world. It's interesting that a headline just last week was that PayPal is now worth more than Bank of America, and Square is worth more than Goldman Sachs. Ant Group is worth more than PayPal and Square combined. And so we start to think about the fact that the merchants are not big retail and commercial operations. Sure, those are merchants, but merchants is actually anybody who now needs to take a payment. Many years ago, someone said to me, do you honestly believe, Chris, that someone can make a payment from the top of Mount Everest? And I said, absolutely yes. And in 2015, Standard Chartered, for a publicity moment, did just that and had someone make a payment using an app from the top of Mount Everest. But if you can make a payment from an app on the top of Mount Everest, you can take a payment from an app on the top of Mount Everest. So anybody, anywhere today is a merchant. Anybody with a mobile phone or with access to a mobile phone could be a merchant. Recently, Mr. Birch and I were in London and we made a payment to a busker in the subway of the Underground of London using a contactless payment system. Anybody can be a merchant. So first we need to realize that the merchant's system is no longer limited to big commercial supply chains. It's anything and anyone, anywhere with an access to a mobile phone can be a merchant. And then the payment itself is also a big questionable area. Andrew Bailey, the governor of the Bank of England, made a presentation last week to the Brookings Institute about the future of money and automation. And he made a number of significant points, but one of the ones that he made is that cash in circulation has doubled during the time that he's been in the bank, which is 16 years, from 34 billion to 77 billion pounds since 2004, and is growing. But cash is one form of payment. And then the other forms of payment when most of us were growing up were maybe checks and card. But now payments is anything of value that can be exchanged through the network. It's not even money. It's anything from data to ideas to photographs to memorabilia to whatever you want it to be. It can be a form of payment. I remember many years ago that Pepsi-Cola take most of their payments in Russia in the form of vodka. Some would call that bartering. I call that a payment. But equally now it could be virtual vodka with virtual Pepsi-Cola as a payment. Anything can be exchanged anywhere via the data network as a payment, which is why it gets interesting when we talk about digital currencies and central bank digital currencies. Andrew Bailey made the note that most crypto assets, specifically Bitcoin, have no relationship to money. I think some of us would question that statement. I think it's interesting that money itself is only a value for those who see money itself as a value. What's valuable to you or valuable to me? If I'm a libertarian and I believe in Bitcoin and the crypto asset community and cryptocurrency community, any of those crypto assets could be of value to me as a form of payment and therefore as a form of money. And money itself is just a belief. I wrote about this in a number of my books, particularly Digital Human, that money is purely a belief system, that it has value and holds value and represents value. But when we think about what holds and stores and represents value, anything can store and hold and represent value to you if you believe it stores and holds and represents value to you. So payments is no longer cash, check, card, data. It's actually anything of value to anybody in the network across that network. And that gets interesting in terms of thinking about the way in which the supply chain, the value chain changes across merchants, across the ecosystem, particularly when anybody, anywhere can be a merchant. And then we come to that last piece around ecosystem. And I love the way in which we use the word ecosystem, because I don't think we really understand what an ecosystem is. We talk about ecosystems. What is an ecosystem? The phrase was first used in 1935, and it wasn't used in a business context until the 2000s. And now we talk about ecosystems arbitrarily all the time in technology. A merchant payments ecosystem. An ecosystem is really, in my definition of where we are today, the open banking ecosystem of the platform of the network. The network is the ecosystem platform. The platform is where we all exist. And we deploy apps, APIs, analytics, services, technologies, payments across that network and that ecosystem on the platform of the internet, the digital service. So an ecosystem is really designed for companies that are born on the network. And yet nearly every company I talk to, particularly large corporates and banks, they weren't born on a network. They weren't born on the internet. They were born in the industrial age of processing paper checks and paper cash. They were built for paper processes around localized networks. They weren't built for digital processes across globalized networks. And so there's some fundamental challenges in what we talk about as an ecosystem, particularly as we need to be partnering in that ecosystem. The amazing success of companies like Adyen and Klarna and Stripe is based on code. Stripe was launched with just 7 lines of code as an API and has become a business that's now valued at being worth more than 7 Commerce banks or almost 3 Deutsche Banks. Just like PayPal and Square are worth more than Bank of America and Goldman Sachs. And Ant Group is worth more than JP Morgan Chase, potentially when they IPO. These are all companies that understand the ecosystem of partnerships and of code, of networking and launching APIs and apps and analytics. How well do you understand that? How well do we understand that? When we talk about an ecosystem, I don't think any of us understand that particularly well, because we talk about an ecosystem and we use it arbitrarily. We use it to just really throw in the idea that we are cool, that we're part of today's generation. But when we really understand an ecosystem, it's not open banking, it's not open payments, it's open everything and partnering everywhere. And what I find particularly challenging is partnering, because if you grew up in a company that's a control freak that never partnered with anybody, how can you effectively be a partner today? The partnership model I always relate back to a personal level, which is if you partner, then you have to treat the partner as equitable, as the same as you, on the same level as you. On a personal level, if you have a partner, do you treat them as less than you? And if you did, what would that mean for your relationship? In an ecosystem of partners, you have to have all the partners working at the same level with the same skin in the game and the same opportunity in the game to have a win-win. Otherwise, it's a lose-lose. So I'm challenging the very nature of merchant payments ecosystem, because I don't think we talk well about merchants that are now anybody who can access the mobile network. I don't think we understand payments because we think of it as exchanging money and currencies rather than value. And I don't think we understand ecosystems because we think we just live in them rather than understanding the platform of the network and the partnerships required within that network to make those ecosystems work. And finally, I'll come back to where I started, which is in this pandemic lockdown, where we've all had to suddenly work from home and to do commerce from home. How well prepared were we for that? Were we strategically ready for working from home, or have we tactically developed to cater with and cope with having to work and deal from home? And one of the questions I keep coming back to in my own mind is, if you imagine this pandemic lockdown lasted forever, is your business built for that? Is your business truly digital? Are you truly operating in a true merchant payments ecosystem, or are you just tactically trying to deal with merchants in an ecosystem of payments? I could get myself into a real muddle here, so I'm going to stop there, except to say that I'm challenging whether your thinking is the right thinking and ready for a never-ending lockdown if it happened to be that way, which it won't. But if it was, could you cope? Back to you, Claire.
Thanks, Chris. Wow, that's certainly given us food for thought. Now, I'm just wondering if we can get the results of your poll, if actually any results came in on that one before we move on to the panel. I'm not sure if the wonders of technology. Oh, here we go. There.
Well, it's nice to know that a third of our audience are honest.
And I'm sure in the questions we'll uncover some more thinking around that. But thank you so much, Chris. You're going to stay with us for the panel. And at this point, I would like to welcome 2 more speakers to the panel as well. So I'd like to welcome Daniel from PaySafe and Michelle from retailer Decathlon to join us. Hi, everyone. I can see you all now on the screen, so this is fantastic. We're making progress with this tech. Daniel and Michelle, before we before we kick off, I'm just going to ask you both to do a very quick introduction. So Daniel, let's start with yourself, if you're okay with that.
Thank you, Claire. It's a real pleasure to be here in such great company. I'm Daniel Kornitzer, and I'm a technologist at heart. I'm also the Chief Business Development Officer at PaySafe. PaySafe, leading specialized payments platform that serves hundreds of thousands of merchants and tens of millions of consumers globally.
Fantastic. Thank you for joining us, Daniel. And now Michelle, hi.
Hi. Thank you very much for the invitation. It's a pleasure to be here. So I'm in charge. I'm the financial guy of the panel. So I'm a treasurer in charge of payments for Decathlon France and also Decathlon Worldwide. So we are a small company in sport retail, present in more than 60 countries in the world, and around 13 billion of euros worldwide. So it's a great pleasure to be here and talk about payments with you.
Thank you. Okay, so obviously Chris took us very much to the future and spoke theoretically about views and opinions on, this world that we're operating in. Daniel, I'd like to ask you to probably bring it back to the current day. I know that PaySafe has recently, or certainly during lockdown, commissioned some research, and I wonder if you could share some of those learnings with us, and also to see if there was a link up with some of the points that Dave raised earlier in his presentation.
Thanks, Claire. Great question. And there is indeed lots of common points with David's 4+4. We commissioned a study of 8,000 consumers in Western Europe, Canada, and the US. And out of that, research, we extracted what we consider to be 4 key trends. One being the shift to online and diversification of the checkout. And well, maybe I'll list you the 4, and then I can double click the actual data. Or I can go one by one. It's your preference, Claire.
And let's go one by one so we can take the audience through.
So if we double click on the shift to online, 18% of consumers their very first online transaction during the first month of COVID. So it's almost 1 out of 5 consumers globally. And 38% of those consumers mentioned that even post-COVID, they expect to do a lot more online transactions. So the interesting part is that many of these changes are going to stay with us once COVID-19 is behind. In fact, one of the biggest findings is that many of the trends that COVID has accelerated were there before. It's just that it's like pressing on the gas. We've done years of progress in a few short weeks or in a couple of months. 56% of consumers used a brand new alternate payment method during the first month of the pandemic. That's pretty substantial. And cash, David was, making a number of comments around cash, and we found that 43% of consumers declared having reduced their handling of cash during the pandemic, and 65% mentioned that contactless is more convenient than cash for obvious reasons, and it's a lot safer. But at the same time, 72% of consumers would be concerned or uncomfortable not being able to access cash still being a universal vehicle for payment. So it seems as though consumers are conflicted when it comes to cash. They fear touching it, for fear of catching the virus, but at the same time, they like to keep access to it. The second major trend that we found is the merging, or should I say the blurring of the physical and digital worlds. And that ties into David's omnichannel comment. And what it really means for merchants of all sizes is that they need to integrate the brand and the checkout effectively to deliver, the increased demand for omnichannel. In fact, imagine you go to a Walmart store and the size TV that you want to buy is not there. You pull out your smartphone and you place an order either to your home or to the store from your phone in the store. Is that online? Is that mobile? Or is that in store? Or is it all of the above? And that blurring with things like order ahead and curbside pickup is become like part and parcel of the life of merchants and consumers, especially in the wake of the pandemic. And think about new technologies like virtual reality and augmented reality in conjunction with, say, 5G, which will provide, as it gets rolled out in many countries, with high bandwidth, low latency access from the phone. So people are going to be able to place orders, videos while they're commuting or while they're, I guess, post-COVID, when they're in a stadium watching a game or whatever they're doing. That accessibility with the phone, as Chris was saying, a phone, anyone can be a merchant and anyone can be a consumer as long as you have a phone with good connectivity attached to it. The third trend that we've seen has to do with, and again, it matches one of David's, the growth of contactless and the emergence of what we call frictionless. So there, we found out that 56% of consumers are more comfortable using contactless cards than a year before. So pretty major change there, particularly in the US, where the usage of contactless has really bolted. In places like the UK, Australia, and Canada, it was already pretty much a very strong trend. But in the US, I think it's been a turning point for contactless. And I think that the other data I wanted to point, 53% of people are more comfortable with the concept of a contactless, or should I say, contact-free, as David mentioned, society in general. And if you push that to the next level, think of Amazon Go, where you just pick up the goods and you walk out of the store. There is no cashier, there is no checkout, everything is AI. They know how many chocolate bars you've picked, and 2 minutes later you get the text and it says, here's your bill, boom, taken directly from your bank account or your card, and you're done. I actually went to the store in Seattle, and it's crazy how well it works, but also how easy they make it to challenge. Let's say you took 2 chocolate bars and they charge you for 3. You can just, swipe that item and cancel. Of course, if you do that for every item, I'm sure Amazon will send you to Walmart. You're the customer from hell. But if you do it occasionally, I think that they make it easy to challenge. Last but not least, in terms of trends, the growth of subscription payments. Our data points that 50% of consumers have at least 2 subscription payments leaving their bank account or credit card account every month. And I think that probably those that use it a lot have way more than 2. And 27% of consumers expect that number to increase in the next year. The main reason cited is convenience, 53% of consumers, and 44% of people think that subscription payments provide better value for money.
Okay, great. So just to remind people, you are very welcome to post your questions. Use I believe there is a polling tab on the screen that you can see. So make sure you submit questions. What I wanted to ask now, Michelle, go to you yourself from a retail perspective. Obviously, we've heard Dave speak about trends and themes, and then Daniel hopefully backing some of those up with real research. But actually, from a consumer's perspective, walking into a merchant, walking into a retailer, are you seeing, with your retail hat on, are you seeing these patterns come through and play out as the research suggests?
Yes, of course. I mean that we had to face all these issues during the pandemic, and it was obvious for us to be sure that we can adapt. And if I make a small point on what Dave said about the flexibility of small stores, which is totally true, they adapt themselves very quickly. And I think that this is the right question regarding big retailers, how we are able to switch when we see the patterns change. I mean, that we have to be very flexible, which is not always very easy because we have big structure. We worked in the past on the vision of payments in Decathlon, and with this pandemic, we have to adapt very quickly. And I think that it's a chance for us because we were able to adapt to change how to pick up goods in store during the pandemic when the store were closed. We implement a kind of drive consuming behavior, which was not in the pipe 3 months ago. So thanks to that, customers were able to pick up goods in store through online payments. So this is why it's also very interesting seeing that how a real omnichannel activity is able to process business. Another point I have to highlight, it's maybe the cost of payments. I mean, that's because it was one of the points we discussed before regarding the fact that online activity, and when we talk about ecosystem of payments, we know that online ecosystem is much more expensive than offline activity. I mean that today when you have to process cards offline, I mean in store, it's not very expensive. Alternative means of payment in store are not very common compared to online. So if we just focus, and excuse me for my financial point of view, but if we are focusing today on how the consumer behavior change and what will be the impact for us as a retailer, it's a kind of disturbing because as a like-to-like activity, it's impossible for us to maintain our margin if we switch 100% of our activity online, because it's not the same when you have to pay your commission to Klarna, to PayPal, to every other means of payment. So I think that this point will be very, and we have to be very focused on it in the coming months, because if we imagine that maybe we will have an economic crisis, probably we will see the next month, plus the fact that people are changing their way of payments from online to from stores to online, it will be very difficult for big retailers to manage all these points. Flexibility, to be sure that we can adapt ourselves to the consumer behavior, the cost of payment, and the fact that probably people will change their way of consuming, probably not buying the same goods, everything like this. But we see all these different changes. Even today, they are still paying differently, not at the same day during the week. So it's a little bit strange, and we have to adapt ourselves.
Okay, thank you. So you mentioned alternative payment methods. I wonder, Chris and Dave, if you have a view on open banking and how prolific this will be in a number of years' time. So if you are a retailer and you are focused on the cost of payments and actually what the opportunity that open banking presents for, you know, once we've got the infrastructure sorted, once we've got consumers on board with the idea that actually they can pick alternative payment methods, and a retailer could say to them, of course, you know, I'll take the payment direct from your bank account. I wonder if you think that this will become prolific and if it will be of benefit to merchants within, you know, 3 years, 5 years.
Well, I think there's two parts to that question, really. So one is, I mean, I think the guys are absolutely right, which is the transition to omnichannel opens up the potential for more alternative payment mechanisms, and it's obvious why. Which is, if you walk into Carrefour and you want to pay with a fancy new payment mechanism, it's going to cost them, you know, a fortune to upgrade all the point of sale terminals and the store controllers and train the staff and, you know, whatever. But but you know, when you're walking in and paying just by scanning a QR code and everything else is done in the back end, then adding a new payment mechanism is nothing. So you would expect to see more alternative payment mechanisms coming through because of Omnichannel. With the specific, and in fact, we're going to be discussing this a little bit on Wednesday or Thursday, because we're going to be talking about the potential, the third scheme, the European payment scheme. But with specific reference to open banking, I feel, last year at MPE, there was a lot of discussion about open banking, and people were saying, well, we don't really see anything. We see people talking about it, but we don't really see anything, which is true. But that's because a lot of it is still bubbling. It's still being developed. But I don't think that should be interpreted as, nothing's going to happen. My personal feeling is that the large merchants will start to take advantage of open banking. It just takes them a while to do it. An interesting benchmark, if you like, came last week, because in the UK last week, the taxation people, the Inland Revenue, Her Majesty's Revenue and Customs, issued an RFP for, I think, something like £3 million to put in their first open banking interface system, with the idea being that, just like any other merchant, they're going to, instead of trying to do direct debits and this kind of thing, debit cards and whatever, they're going to start sending RTP messages, and you will instruct the transfer back through your credit instant payment system. So there was a lot of discussion about open banking last year. I think people were right to say, well, we don't see very much happening, but I think they're wrong to say from that nothing's going to happen. I think it is going to change the ecosystem, particularly because of the omni-channel aspect, which means it doesn't need changes at retail point of sale.
Okay, and I'm actually going to, we've just had a question in from the audience. Do we see open banking picking up during Corona times? Do you think that it will help in touchless payments? And Chris, I'd like to post this one to you first of all, because you spoke a lot about cultural and behavioural environments, I guess. So I wonder if you have a view that you think that actually Corona and the pandemic will change the speed at which open banking and this opens up to the market.
I think there's a challenge right now, which is industrial era financial institutions not being able to cope with open payments ecosystems. And a great example of that is during the lockdown. First of all, could I actually contact the bank? And quite a lot of the traditional large banks became uncontactable because staff were working from home and their call centers were based in India that shut down with 4 hours notice. And even when you can get through to them online or via a mobile app, what information do you get is often a truncated message about the payment that was made, which doesn't actually tell you much. I spend huge amounts of my time trying to work out where did this payment come from if I get money in my account, particularly as most of my clients are overseas. So all I get is a truncated message saying XYZA, B sent X $1,000, bang. And I'm going, who is this? What does that relate to? I have no idea. And yet I'm currently living in Poland, have been for a couple of years, and I switched quite quickly to using TransferWise and some of the other more savvy, newer apps and systems. And what I love about that is every time I spend any money on my TransferWise debit card, I get a notification in real time on my phone saying you just spent 150 zloty at this place. And if I want to know more, I can find out what that place is on Google Maps. I can find out a lot more information about that place. It's not truncated to, you just spent 150 zloty at ABC, which is what I get from my old traditional financial institution. And so the challenge with open systems is the traditional companies that aren't ready for those open ecosystems, the new companies that want to exploit them, that can give data enrichment, which is what really it's all about, and the end game that plays into, which is how do we end with something that is workable on both sides of the house. And to be honest, and I've talked about it so often that I'm croaking with my voice as I say it, banks just are not digital. They're industrial. They haven't refreshed and renewed their core systems. The very fact that we've mentioned channel for all of this conversation, which Dave Birch knows is something I will never use in conversation, because channel to me is like saying tape. I tape recorded something. Do you still tape record something? No, you don't. That's last century. That's what channels are. They're last century. We should be talking about digital at the core, data enrichment, open APIs, full leverage and usage of the capabilities that the platform and the ecosystem can give us. And we can't do that whilst we have truncated messages based on batch overnight updates.
And there we have it. Right. Okay. So on that one then, I think
this is one of the reasons why I'm so bullish about the open banking transition, Chris, because I think although it seems a very technical thing to move from 8583 to 222, when that's done in a standardized request to pay framework, people will get used to these kind of much more data rich transaction environments, and they'll begin to demand that. And, when you get to the situation when, you get your Visa bill at the end of the month, and when you click on it, nothing happens because they don't know. But when you get your bank statement, you can click on it and actually see the airline ticket or the bill from the shop or whatever. I think this data richness around open banking has a big part to play in pushing that transition along.
Yeah, and I was going to just ask Michelle, from a retail perspective, are you ready to embrace this move around data? Are you ready to serve your customers with more data? Is that something you mentioned that you were able to move quite quickly to introduce new angles onto your roadmap that perhaps 6 months prior you wouldn't have been able to? Are you now ready to take this next step? Is the data something that is hugely valuable for you and your customers?
Yes. I think that, but we invest a lot on data during last month and probably years in Decathlon. We had the chance to have free loyalty programs. Like this, we are able to manage a lot of data, and we work also with a very good supplier on payments to be sure that we can also use their system to switch very quickly, to propose specific means of payments depending on the purchase, on the value of the purchase, and everything. So we know that we will have to adapt. It will be difficult because each time it's always the right balance between what will be the cost of the new means of payment, the new way of payment, compared to the level of fraud, because I think that probably fraud will be the new regulator for payments, and we don't need strict laws, but retailers are very good to adapt themselves regarding the fraud and risk. So we will have to change, we will have to use data, and not only on the commercial point of view. I mean that it's not only to be sure that I will be able to send you the right email at the right moment. No, it's more to see, okay, you are in this situation coming in one store, Decathlon, but as you are a well-known customer online, I will propose you something very specific, and you will be able to use your own means of payment, the one you are used to and the one we can trust you, to be sure that we can propose you something totally different. Something very interesting, I think that Chris talked about that regarding the competition, not the competition, but the fact that people now, they are used to different way of payments everywhere, as there is not only big retailers, but we have small retailers. Everyone can be a retailer and propose specific means of payment. So it means that our customer have knowledge of payments, and they can say, okay, I use this means of payment in this small shop, but they are not proposing it in Decathlon. It's not very good for us. So our competitors are not only the retailers for sports goods, but also means of payment used in different branches, online websites, and everything. So for payments, I think that competition is big, which is very fun. I mean that it's better to be a treasurer today compared to 20 years ago with only 3 means of payment. it was probably so boring. But today it's amazing because we have a huge field of potential means of payment, of data, how to use them together, how to be efficient, very, very flexible, reactive. I think that this is the key word for retailer today. And the pandemic teach us this, that world will never be like we thought in the past. I mean that before pandemic, it was very easy to imagine a roadmap in 2 years, 3 years, okay, it was fine. Today, we know that we have to adapt ourselves in only probably 6 months, probably less than that.
So you've gone from...
think, Michelle, that can be I think that can be a strength in a strategic position, though, because realistically, we know that pandemics, this isn't going to be the only pandemic. You know, I mean, we all understand we're in a very globalized and interconnected world now. We sort of didn't pay attention because when SARS came, it really, you know, it didn't really affect us so much. But any of us who remember working in Singapore, Hong Kong at the time of SARS, I can remember, you know, people, when you press the button in the elevator, people would come and clean it. And the people were and we thought that was odd, and now we realize actually that's normal. So when, in theory, if we get the strategies right, and I'm very sympathetic to what Chris says about people being really digital and not just superficially digital. If we learn the lessons properly from this, then actually we're also setting ourselves up for success in the next pandemic, which is inevitable. So I think a strategic focus on some of the issues you talked about there is really important. It's not a short-term thing just to get us out of this pandemic. It's to make sure that we're not affected in the same way in the next one, because this is the new normal, right?
Exactly, it's the new normal, and we know that now that it will always change, and we always have to adapt. I mean that nothing we knew in the past, that nothing was forever, but today we really identify that some big retailers went bankrupt, and not only small shop, but very big in France. But I think that it's the case in other countries. So we know that it can touch every retailer in their activity, even if they are very strong. They have to adapt. It's not only linked to payments, obviously, but on the strategy of omnichannel activity, how to manage stock, very important. I think that omnichannel activity, it's not only focused on payment. It's really a big need for retailer, and we saw it when online activity exploded in France for Decathlon. We have a lot of stocks, millions of stocks in stores, useless. So it was very important for us to be sure that we can use this stock through omnichannel, a real omnichannel activity, bringing payments to stores. So I think that it was a very big lesson for us.
Yeah. Daniel, did you have something to add on this?
Just one thing I wanted to add to the impact of open banking, that if we want to get a glint at what it can do, all we have to do is look at UPI in India, and some of the things that they've done extremely well. The first one, addressing Michelle's concern on costs to the retailer or e-tailer, because those costs are minimal. It's an open interface, both banks and fintech. It's coupled with biometry, so it adds the digital identity component that David mentioned before. It's a partnership between industry and government. It's open to like 100 plus applications. It's real time, and it supports both push and pull payments. So UPI in a way gives us a sense, or confirms the true potential of open banking for the rest of the world.
Okay, fantastic. Now, I've just seen we've got a couple of questions that have come in. We are out of time, but Daniel, you lead me nicely into the next session, which will be starting in about 20 minutes or so, where we are going to be looking at a couple of different markets. We're going to be looking at Russia, and we're going to be looking at LATAM, and take some learnings from those markets as well. Thank you all for your contributions. I know it's a conversation that we could carry on, because we all, not only do we work in this environment, but we're all consumers consumers, and we all make payments and buy stuff. So it's very relevant, and we can all talk about it for hours. So thank you all for your contribution, and we will make sure that we try and follow up with these questions to get the answers out to the audience somehow. Thank you very much.
Thank you, Claire. Bye-bye.
Thank you. Bye-bye.